So if 3.5 people are billion users in 2030, well, the market cap's going to be something like 250 trillion. Yeah, it all kind of backs out pretty straightforward just using network adoption models.
So what the hell is happening with the market right on this last months?
Yeah, I mean, it took me by surprise. My base case was that we were going to see the typical year-end rally. Obviously, most of us had the same idea. Usually when most of us have the same idea, it doesn't work. But the other thing I did know is, having come from that finance background, knowing how hedge funds and institutions work, I also knew that if you're a hedge fund and you've got crypto in your portfolio, you've probably had a good year. So to get paid, you tend to close out your portfolio. So you know what you're going to get paid at the end of the year. So they are incentivized to sell their positions, to go away for Christmas, have a break, that kind of stuff. The institutions like pension funds and others, they tend to rebalance their portfolio. So like Ethereum's up 500% this year. So if they started with a 1% weighting, they're now at a 5% weighting. So they'll probably bring it back down to, let's say, a 2% weighting in line with their allocation. So you've got institutional sellers that never really were in the market before. And they're not expressing, I don't think, a negative view of the market. What they're just doing is rebalancing for year end. And so my general view is that most of that selling is now done. And so the next thing they all come into January with is a new P&L. And, oh, what do I do now? The only answer is I have to buy more.
So basically all this red wave this last weeks was like people selling, making some profits, and also rebalancing, you think?
Correct.
Okay, cool.
Correct. That's exactly what I think it is.
Okay, so let's move on. Like we said, like it's a pleasure and an honor to have your brain for a few minutes. We want to get as much as possible from you. So I would like to talk, so we can talk a bit now about Metaverse, Web3 and DAOs. And I'm sorry, but I will start with a polemic question. So yesterday, 21 December, Jack Dorsey tweeted that we don't own Web3, like quoting the tweet, like, you don't own Web3, the VCs and their LPs do. You'll never escape their incentives. It's ultimately a centralized entity with a different label. Know what you're getting into. So my question for you is like, so based on this tweet, so he said like that Web3 is owned by a few venture capitalists, mostly the same guys, same story from Web2 with different characters. So do you think, what do you think about this point of view, and do you think it was a misleading generalization?
I think it is a misleading generalization. Yes, obviously, there's a lot of VCs who want to invest in Web3. But what is ownership in Web3? What is Web3 all about? It's about the community sharing in the economics of the network. Just because VCs have some share of, let's say, a holding company that is setting up a business doesn't give them ownership of the network. This is the difference. Facebook and Twitter, the ownership of the network was only with the shareholders and not the users. So it's a fundamental misunderstanding of what Web3 is all about. Web3 is the shared ownership of the network. That's how I think of it. So I get what he's saying. He's basically saying, well, Bitcoin didn't start backed by VCs, but I'm sorry, but stuff like Square that, Strike, stuff like that, the layer 2 payment solution, well, there's venture capitalists in that. Capital needs to come from somewhere. It doesn't all come from individuals, and you're not allowed to raise initial token sales from individuals without it breaching securities laws. So it's a bit disingenuous to talk about it in that way, and it's a bit misunderstanding about what Web3 is.
Yeah, internally, me and Gelf, we are discussing that maybe like we know that he's a Bitcoin maximalist, and maybe this can be interfere on his judgment some way, right?
That's right. And there's nothing wrong with somebody focusing their attention on one particular area of this new revolution, the blockchain revolution, digital assets. But it doesn't have to be at detriment of everything else. That's crazy. It's not a zero-sum game.
Yeah,
but his idea is if we don't create sound money first, it's all lost.
Yeah.
Okay, that's his opinion, and good for it, Jack. Go for it. Get people around you, build stuff, do stuff. but don't take away from other people doing other things in the digital asset space, because there are other people who are focused on specific things in DeFi or stable coins or interoperability, and they're all equally applicable. Let everybody focus on their bit. That's how distributed networks work. If we all focus on our bit, we've got a massive network of experts all focused on building out component parts of all of this.
Yeah, sure. And how many years you think that crypto in general will be less volatile due to this mass adoption that's happening? If I'm not mistaken, you say it's about 113% a year. Is that right?
Yeah, I'm just going to look at my Bloomberg screen to see what the volatility of Amazon is, and that'll give us an idea of what a large adopted network, which is in an exponential or logarithmic trend. So Bitcoin is roughly about 75% volatility. So it's a very volatile asset. Let's have a look. So I'm not sure I can't find it yet, but what we'll find is that over time, volatility falls as more people are in the network, because you don't have discrepancies between buyers and sellers that create illiquidity because there's more people in the network. So you'll tend to find, Amazon now is trading off call it a 30% volatility. So it's half that of Bitcoin. So I think, as Bitcoin or cryptocurrencies get to 1 billion users plus, what we'll find is that the volatility will fall, the prices become less exponential in nature, both to the upside and the downside. But it should remain in a logarithmic trend.
In how many years do you think this market will be less volatile, the crypto market?
Like 1 billion people, when we reach 1 billion people, it's due to the growth.
Well, 1 billion people, bizarrely, because of the compounding numbers, if it's growing 113% a year, you get there by 2024.
Wow.
Yeah, because I always see this day coming, I think, and I always see it foggy. I don't know if it will be like 2 years, in 5 years, or in 15 years. Well, I hope I will be alive.
Just use the adoption curve. Assume it slows a bit, because adoption always slows because the rate of change goes down when more people are in it, right? So it's easier to go from 1 person to 2 people. That's 100% growth than from 2 to 4. So just extrapolating the numbers, you get to 1 billion people by 2024. And that's by slowing the rate of growth down to 80%. And so you're at 3 billion, 3.5 billion by 2030.
Mm-hmm.
And I see emerging countries like Brazil getting mass adoption in crypto. Like a good data for you is that Brazil has more crypto holders than people invest in the stock market, for example, which is kind of amazing, right? Due to this volatility, people are, no, I don't want to invest in crypto, but they're really adopting it. So it's fascinating.
Well, and also look at the holders of crypto. They're not the traditional holders of equities.
Yeah.
So here's a bunch of old people wagging their fingers saying, well, it's much more volatile. The younger people who own crypto like the volatility, because the volatility gives returns, risk reward. Well, the equity market gives less of that. So it's a whole change in risk appetite for the population.
With your macro analysis background, what do you believe it's a realistic target to the crypto market cap for the next 5-10 years? And how do you get this number?
So it's currently about 2.5 trillion. If I look at all the other asset classes around the world, equities, bonds, real estate, they're all between 250 and 350 trillion. If I look at the total derivative market, it's 1 quadrillion. I think there's a reasonable chance of this being a $250 trillion asset class, which is 100x from here, which would be the largest growth of any asset class in all history in the shortest period of time. That will pretty much dovetail in with the idea that 3.5 billion people are using it by, that's just extrapolating the growth numbers of the network. So if 3.5 billion users in 2030, well, the market cap's going to be something like 250 trillion. Yeah, it all kind of backs out pretty straightforward, just using network adoption models.
Mm-hmm. Right. And So one more question on regulations, and yeah, also I think if we can jump on and speed up a bit, we have just more a few minutes with Raoul. So when regulations come, do you believe the market will crash? And if yes, do you think there will be a fast recovery or will be a slow recovery?
I think we probably, because of the new entrants into the market, the downside will be less big in the major cryptos. It'll still be huge in the more risky stuff. And I don't know the format of where we go, whether we keep going that log trend and we keep hitting the bottom of it in a sharp sell-off like we did this year, down 50%, then back up again, or whether we do a down 50, down 40 and trend sideways for a year. I think we'll see both of those types of price actions. So, but I don't think we get the down 80, 90. I don't think that's applicable in the market as deep as this now.
Everyone talks about these Ethereum is going to flip Bitcoin in market cap. What's your take on that? I mean, you think it's gonna happen or?
Yeah, but who cares?
They're flipping it.
I mean, who cares, right? They're two different things.
Yeah.
It's ridiculous.
Yeah.
So they're two different things. I think the application growth of the network of Ethereum is currently miles larger than Bitcoin, and therefore ETH is still undervalued versus Bitcoin. But ETH will lose market share to others. And it's the whole space will go up 100x. And nobody should care what's the largest thing here. It's the whole space we're interested in.
Maybe we care.
I saw a tweet recently about a guy. I don't remember now who was just on Twitter, but because he was commenting like this last crash, these last weeks, the Ethereum share looks more healthy than Bitcoin. Like both are down, but looks more healthy, and I can also see that. But it's very simple. Like it's very simple because they're totally different technologies. They're totally different things. That's why.
And Ethereum is a richer, deeper environment with more participants in the network. So it's going to be slightly more resilient at this point. Exactly. And that's okay. And again, people take this flippening as like, oh well, Ethereum's now a better cryptocurrency than Bitcoin. None of us think in those terms. It's just, it's like comparing Apple and Amazon. They're just different businesses.